This is an economic evaluation profile for Citibank in China, presented by Ryan Shanahan and I, Kent Longhini. So what is most important in business relationship in China? Guanxi. This literally means relationships. In the Chinese business world, however, it is also understood as the network of relationships among various parties that cooperate together and support one another. The Chinese business mentality is one of, you scratch my back, I'll scratch yours. In principle, this boils down to exchanging favors, which are expected to be done regularly and voluntarily. Therefore, it is an important concept to understand if one is to function effectively in Chinese society. China's 2012 GDP was $12.38 trillion, with their GDP per capita at about $9,100. Now, looking at those numbers a little more deeply, at the real GDP per capita in the United States and China, China in 2010 was at roughly about 16% of that of the United States. Projected in 2030, China will grow to be about 33% of the real GDP per capita compared to the United States. So the future outlook in China looks very well for Citi.
Economic overview of China. Exports totaling $2.05 trillion, the largest in the world, growing at 7.9% between 2011 and 2012. Its main export partners are the U.S., Hong Kong, Japan, South Korea, and Germany. Imports totaling $1.817 trillion is the second largest in the world and grew at a rate of 4.3% from 2011 to 2012. And its main importing partners are Japan, South Korea, the U.S., Germany, and Australia. Looking at the exchange rate currently is 6.31 renminbi to $1 US. The inflation rate in China is 2.6% compared to the United States of 2%. Looking at the bank lending rates in China, the central bank is able to lend money at 2.25%, and banks in China are able to extend a 6% lending rate to their most valued and credited customers, which gives us a net rate of 3.75%. Compared to the U.S., where central banks right now are lending money at 0.5%, and the lending rate to their most valued and credited customers is 3.25%. which is a net rate of 2.75. So we see that in China right now that even at their most credited customers that they are 1% higher currently right now than the United States. The banking industry in China. Different types of banks exist in China, such as policy banks, which are very similar to the United States' Freddie Mac and Fannie Mae, which deal in a type of niche banking. The largest types of banks in China are equitized banks, which were government operated and ran, but have shifted towards a more commercial operating banking policy. But the major stockholders in these banks are the regulatory agencies within China, such as the People's Bank of China and the Ministry of Finance. Local banks also were mostly government owned, but have shifted towards a more commercial operation. But still, these local governments own the majority of the shares in these banks. Foreign and private banking, which Citi China would fall into, is been able to operate since 2006, but also faces different types of regulations which the other banks in China do not face. The regulatory system in China has 4 parts. The People's Bank of China, which is very similar to our Fed banking system here, issues the interest rates, currency, regulates China's gold market. The China Banking Regulatory Commission is the regulatory oversight of China's banks, ensuring that they are abiding by relevant laws and regulations, and the interest of depositors and consumers are protected. The Ministry of Finance was the sole authority of China's financial sector, but has been replaced by the People's Bank of China. Currently, they formulate, implement China's fiscal policy. They also propose and collect taxes for the central government. The state-administered foreign exchange. Its main function is to manage China's foreign exchange, including maintaining balance of payments, statistics, regulating and monitoring foreign exchange transactions, and managing China's foreign exchange reserves. The pie chart on the right shows the composition of the banking sectors in China. Citigroup falls in the 1 percentile of foreign banks in China. Here we see that 72% of the industry is large commercial banks, which would be the equity banks. And then we see that 5% makes up a policy-oriented banks. And these other three would be considered local banking industries. The banking industry in China. This is 2011 figures. Its assets in the banking industry were $17 trillion. Its deposits were $13 trillion, and its loans were $9 trillion. Here we see the Chinese banking system compared to its GDP in 2011. Here we see that its assets were 240% larger than its GDP. Its deposits were about 179% larger than its GDP, and its loans were about 122% larger than its GDP. We also see the breakdown of how each bank comprises of these assets, deposits, and loans. We can see that the large Chinese banks and the other domestic banks in China pose a huge portion of this banking system, but we see just a small segment of the foreign banks which own assets, deposits, and loans. In China, the banks have a tax rate between 3 and 20% depending upon what type of banks they are. Regulation for foreign banks in China. In compliance with the World Trade Organization in 2006, China had to open its banking industry to foreign banks. China's State Council then produced the Decree number 478, which is the information in which banks have to follow if they wish to enter into the banking industry in China. The banks are following underneath the China Banking Regulatory Commission, which regulates the policies which the government sets forth. This agency has the power to change regulation if they see that they need to, such as right now they are limiting banks by allowing them having only a certain percentage of what they consider these management risk operations, which are deemed right now maybe unsecured. Entering the market in China, you need to have 150 million in registered capital and 15.7 million in non-callable operating capital. Another major regulation in China is the ratio requirement. The ratio of loans to deposits may not exceed 75%. Another regulation in China, which is a large one, is the services denominated in renminbi, which you have to have a 3-year presence in China and 2 years in a row of turning a profit.
Now looking at some of the barriers to entry for foreign banks. As you will see, some of the barriers go hand in hand with the regulations covered on the previous slide. In a 2011 report to Congress on China's World Trade Organization compliance, the United States Trade Representative, or USTR, mentioned 4 barriers in China related to banking. First, USTR sees the capital requirement for foreign banks as a major barrier to entry. The amount required, as previously mentioned, is 156 million in registered capital to start a bank and 14 million to open a new branch. Second, foreign equity ownership has been limited to 25%, although there are existing regulations allowing for up to 49% ownership for joint venture banks. So what does this mean? Well, this denies Citibank expansion through the purchasing of Chinese banks. Third, the requirements for a foreign bank to offer financial services in renminbi are restricted. New banks must provide services in China for 3 years before they can offer financial services. Although we know this is not a concern for Citibank, seeing they have been incorporated in China since 2007. And fourth, the process of obtaining approval to open a new bank or branch is slow and inefficient. The first step is the submission of application documents to the CBRC, which in turn must make a decision within 6 months of submission. The second step involves the submission of additional information within 6 months of receiving the decision of the CBRC. Finally, the CBRC has up to 2 months to approve or reject the second submission. After all this is complete, it can take 270 days to construct the branch. Due to the loans to deposit ratio requirement of 75% and the small market share of foreign banks, which is less than 2%, as we saw earlier, it is hard to come up with enough capital to provide big loans to large corporations. For example, Disney needed a $4.4 billion loan that no foreign bank could actually provide because they didn't have enough capital. Also, in an interview with the Congressional Research Service, an officer for one U.S. bank claimed that Chinese regulators are requiring U.S. banks to open a branch in a commercially undesirable city in order to obtain approval for a branch in a more commercially desirable city. So these are some of the barriers for expanding for the foreign banks.
Emerging markets, mobile banking and e-banking. Citi has a very strong infrastructure for providing e-banking and mobile services, which has been trending enormously the past few years. In China, there's 564 million internet users and there's 1.15 billion cell phone users. So the access to internet is at our fingertips and is made very convenient to bank like this through Citi. Also, Citi is one of the only foreign banks that is trying to grow a retail banking clientele, which is a niche, and they are doing so because they are looking to explore new growth in order to raise their deposits. The Citi credit card issuance is the only foreign bank outside of Asia that is able to issue credit cards. Citi won approval to establish a joint venture securities firm in China together with Orient Securities Company and was approved by the China Security Regulatory Commission. Regulations that are sometimes problematic are seeing pressure to open restricted markets that recently are allowing foreign banks to distribute products from local mutual fund managers, which is a $585 billion market. All three of these are very strong emerging markets that Citi just has gained access to.
The innovation does not stop there. Citi China is the first and only bank to offer mobile collection in China and is the first branch across Citi that utilizes its global mobile engine. The solution replaces cash collection with a secure, convenient mobile solution, settling funds in real time at the point of sale with immediate confirmation to both the buyer and seller, enabling customers in the consumer sector to directly collect from their distributor's account upon SMS confirmation and deliver goods upon a timely credit advice via SMS. The solution is also scalable to customers in other industries with direct distribution models. Also, Citibank announced the launch of a multi-currency notional pooling with renminbi capability, making it the first bank in China to offer a tool of this kind under its liquidity management product offering. As one of the most advanced liquidity management solutions available to companies, multi-currency notional pooling is widely used at international financial centers such as London and Singapore, often adopted by corporate treasury centers to efficiently manage cash flow from a centralized location. The solution can also help corporations manage cash in multiple currencies as a single position without altering foreign exchange exposures or having to perform foreign exchange swaps. With this pooling solution, each account retains autonomy within the pool. The currency and account type of balances do not change, and balances in different currencies are not commingled, but notionally aggregated. By doing so, corporate treasury centers can effectively leverage internal funding across currencies and in turn benefit from foreign exchange cost reductions and increased operations.
Emerging markets. Here we can see in this table that Citi is very dominant with their platform and internet banking. They were voted the best in a large portion of countries in the world, and their main competitor and other foreign competitor in China, HSBC, has a very strong platform also. But in China, Citi is voted the best corporate institutional internet bank. But we can see that they dominate in the majority of these categories. Emerging markets. These are the four largest equity banks in China, and this is how they diversify within themselves. Largely, they do corporate banking and have different types of capital investment, but now we see an emergence in personal banking, which was not there before, which shows that with the wealth that China is getting, that they are taking in more deposits now, and this is a growing and emerging market, which Citi is trying to build up themselves as trying to build more of a retail market for personal banking. And also, most of the people that will be, the things that Citi is trying to implement as e-banking is more of a personal banking type of function than just the straight commercial banking and loans. Emerging markets. This is another example of a very fast growing market in China, which is e-commerce. This market last year took in $190 billion in sales. It grew 66% from 2011 to 2012. In this graph here, we can see that China has almost 220 million online buyers compared to about 150 million in the U.S. And this is expected to grow next year also. This helps Citi because we have the credit card now and online buying through the credit card. And also with just the convenience of being online and pushing online e-commerce with online banking, it kind of will go hand in hand with an emerging market in China.
In conclusion, China's economy is growing rapidly. Therefore, the need for more capital and loans is going to grow in demand. Expansion is going to be a long and tedious process, considering the amount of regulation and the barriers that do prevail. Finally, through a combination of the right guanxi and the ability to provide cutting-edge technology in the banking industry, Citibank should continue to see growth within China. Thank you for your time. If you have any questions, feel free to email us at the addresses provided.